Hi everybody, Eddie here, going to do a market update for next week. So we had a pretty good week on the bear side. After CPI, we thought it was going to either break out or break down. It actually did nothing except for the went back and forth within the range and then stopped somewhere in the middle. And then the next day, we actually tried to break back up to the highs of the CPI day, and it failed. It stopped up top, looked really bullish. It was looking like it was going to break out. And then the next day, we get that big drop, gap down, and big drop, right? And then we have a continuation down. So far, this chart still looks pretty bullish. So it's not too bearish just yet. We're still making higher highs and higher lows. So what I'm looking for is actually another higher low from here. So in this leg right here, this looks like a bull flag. It is below the 8 and 21 day moving average. So to me, it looks like it's going to retest, make a low high, and then continue lower. The way I look at it is if we break 40-50 on SPX, there's a chance it will come all the way back down and retest the 50-day moving average, right? It can retest this area and then it can go higher after that. The 50-day moving average is right around the megaphone channel at the top of it. So it can come back and actually retest and then go higher, right? Because this move, if you measure this move, right, we're only down to about 0.382 area. So this is a bounce area. But you can come all the way down to around this 50 or 200-day moving average, which is a support area as well. So if it does come back, it doesn't surprise me if it does. If market gets weaker, we're in February, so second, third week of February tends to be a little bit weaker. So if we do pull back, I expect it to pull back somewhere along right here, and then we might chop around and then start trending back higher, right? So that's what I'm looking at. As for next week, on Monday, we possibly try to fill this gap and then continue lower afterwards. So if you go into the hourly chart, so we can see that we're in this channel, right? So he comes down and retests this channel, that 200 period moving average right there. It did close with a reversal pattern. It's right at the 8 EMA. So it is likely that we could possibly see bounce up, fill this gap, tested 21 and failed, or come up and break into the 50 period moving average and failed. So that's very possible scenario as well. And if it does fail right there, it's likely it's going to come down to around that 4,000 to 3950 area, right? And that's the area you really want to see hold. That's what's if he holds that area, we're still in an uptrend. If he doesn't hold that area, it could be a trend change and it could get much worse. So I'm looking at something like this, right? And then maybe chop around and then continue higher, right? So that's the scenario I'm looking at for now. As of right now, I'm looking for a bounce, and then we'll see what happens around that 21 and 50-day moving average. So we do day trade, so we're just trading this day by day. We do have some swing trades on, but very small positions. And when we're just selling puts to get shares for longer term, really. So we're not really full swing swing trading just yet. We will be once if he comes back and holds this area, I will be buying some swing trades. I will be getting in. I will be deploying more money once he comes back and retest. Right. Once I start seeing this retest, it's likely we won't bounce and we're going to test this high right here. Right. So that 4,300 is the target. And it needs to come back to somewhere along right here and then bounce. I want to see a reversal pattern somewhere along this range right here and continue higher. If you continue higher from here, we're going to push up to around this 4,300 area, which is this resistance point right here. And that's the area that it's going to either make or break the market, right? So if we are going to come, and this is the start of a new bull market, we need to break above this 43.25 area, right? Needs to break above this, so it creates like a higher high of this peak right here, right? So as you can see, we have a double bottom and then we have a higher low, and we're making these mini higher highs, but you need to really break above this to consider to make a much bigger higher high. Once we do that, we're changed into a bull scenario, and then it gets much more bearish once we stay above that 4,300 area, right? So for now, just be patient. If you have money sitting around, you can swing trade a little bit. I would deploy like maybe only half your money if you want to swing trade. And then once we get above that 4,300 and we start into a new bull cycle, that's where you want to start wanting to go fully invested again, right? So as for right now, we're in this consolidation phase. In a consolidation phase, they tend to go back and forth a bit. And then once we found a bottom and we do decide to go higher, it's going to start trending again, like right here, right? So you can see it's pretty choppy still. Consider we making higher highs, higher lows, but the process is fairly choppy, right? So that means it's still in a day trading environment, and you're still getting some really good ranges that you can trade off that. So that's why I'm still just day trading. I'm not really focused on swing trading just yet. Once things start coming down and day trading is no longer as lucrative, that's when I probably going to start full-time swing trading again, right? So let's see what happens after March. April usually a fairly good month seasonality wise. February and March tends to be a little bit weaker. So in February and March, I tend to look for bargains for swing trades for April, right? So if we do come down to about right here, a lot of things are still on sale. So if they pull back a little bit more, it's time to start going into those stocks, right? Let's take a look at the Qs. The Qs are really strong. You can see how strong this move is. So it was lagging all the other indexes, and right now it's coming back, and it's coming back with a vengeance, right? So it's this shows me that risk is back on the table, and retailer a lot of this is retail and buying, right? Retailers love high tech stocks, right? So that's why it's been moving so parabolically, is because there's a lot of money that was sitting on the sidelines during this downtrend, and they're finally deploying that money. So you can see that right here, this is a big impulse move, right? So I am looking for a pullback into this 200 period moving average, and then hopefully you'll hold this area, and then we're going to get that sharp rally up. And then, you should have a watch list by now on the type of stocks you want to go into for the longer term, because now is the chance where a lot of things are starting to bottom out and finally starting to break back up in the bull side, right? So if this market sustains itself and pulls back and hold here, it's safe to say that we're going to expect to go much higher for the year, right? So start looking for bargains on high quality stocks that will start moving really quickly. Even high growth names, you can start trading those high growth names. The reason why is if you look at the ARK ETF, right? If I still have the ARK ETF here. Oh yeah, right here. So ARK ETF just broken out of this 200 period moving average, and it's consolidating with all the moving averages kind of stacked in one place. That's a really good sign. You can see the volume start coming through. A lot of risk money is coming back into the markets in these high growth names. It could be the bottom for these names, temporary. I wouldn't expect it to go like all the way to the top just yet, but I do expect that we could get a sharp rally, maybe to the high right here or to the high right here. This is the most likely area that it will rally into, right? So if it breaks out of here, you see I already set my alert right here. If it breaks above here, it's likely we want to go for this high right here, 54, and then we're going to go for that $70 range, right? So I look at ARK as a sign of what type of market we're in, right? Because if ARK start to move, it means there's risk money coming back into the markets, and then also means there's a lot of retailers in the markets, right? So, when there's a lot of retailers back in the markets, um, the market makers tend to make money off the retailers, but if the momentum is good, right? And we get a big push up, we could get some pretty strong parabolic moves on the way up. They can get short squeezed. A lot of people shorting these things. So if there's momentum, there's volume coming through, he's going to get a major short squeeze, and then we're going to get that big parabolic move, and then we can capture some of that coming up to that $70 level. So that's almost a double from where it's trading out right now. So if you want to trade this, the way to do it is with some long-term call options. You could do a wide, slightly longer dated debit spread as well if you want to go the cheaper route. So I would probably do like a 40-60 debit spread, or maybe a 40-70 if you. It depends on what the price is, but 40-60, 40-70 is what you want to look at least 60 to 90 days out. So we give you some time to actually make that move because it is still in consolidation phase, right? So by the time it breaks out here, that's where you really want to enter. And this could be an easy double, could be a nice 3x if you're trading options, but yeah, so keep an eye on this ARC ETF and see how it goes. All right. I was looking at some of the mid caps and small caps, and they're much stronger than index right now, especially the mid caps. Mid caps is only back at the highs now. So if you look at mid caps, this looks like bull flag, continuation bull flag. But I would like to see it cool off a little bit, come back to retest around here, and then that's more sustainable move. If it just continues right here and breaks out, it's going to create like a more parabolic move, like way up here, and then it's going to get like a big sharp sell off, right? Because when it moves like parabolically, they tend to get sharper sell offs. So just pay close attention to see how this moves. I do suspect it to come back down to retest probably the 50 period moving average and go continue higher from there. The VIX is still hovering around the 20 area. It went as high as 22. Didn't quite hit up to that 25 area just yet, but as you can see right here, it is basing. So meaning that there could be a sharp pullback on the SPX, possibly. So you just want to be careful when SPX is consolidating like this and momentum slowing down, because if the momentum starts slowing down, it's likely you can pull back pretty far. So I usually look at pullback around that 50% of the move in maybe 61.8% area as a buy zone. So that's what I'm looking for, is for it to come down to around this region right here, which is between 3,950 and 4,000, right? So it might chop around before it drops. So it might retest it and then fail before it drops down to this area. So I am looking for a little bit of a correction to come back down before continuing higher. All right, let's take a look at some stocks. This is Apple right here. Apple looks like it's topping a bit. It had a really nice break of that move. And as you can see right here, like this was a big, strong parabolic move coming out. So it is very extended. It needs to cool down. So it needs to pull back. So where it's going to pull back, measure that move. Likely it's going to pull back somewhere around this region right here. So along that 144, maybe 140 area, it's a good buy zone. So if it comes back and holds around that area, then that's the area you want to get back in with, right? Right. AMD. So AMD, if you measure the linear regression right here, you can see that AMD hit the top right there and start pulling back. So what I'm looking for is for it to come back closer to the 2 standard deviation area. So if it pulls back somewhere around this 70 to 72 area, that's a buy zone. That's where you really want to get back into the stock if it holds. because as you can see right here, we're still making a lower high compared to this, right? So it's making these mini higher high, higher low. So that's the first sign of a trend change. But it really needs to break above this area in order for the downtrend to officially be changed, right? So it can work its way up that area, so you can come back. And then he's going the next move up, maybe hit there, and then probably a strong rejection off that level. So we'll see what happens once you get there. But for now, the scenario is you'll come back maybe around. If we continue up higher here, it can happen as well. But if he pulls back, this is the area you want to look at. Is there somewhere around that $72 to $70 area? That's the buy zone, and then maybe ride the next wave up. Amazon. So Amazon's a lot weaker than their names. Amazon had earnings. It flew. It went up to the 200, got rejected straight down from there. So you can see that we're in a very defined downtrend, and it's still a very strong downtrend. Um, the EMAs are still very wide, in a very wide state. That means it needs to consolidate a while before you can actually make a move and go higher. So these are Amazon right now is a good name that you can do some spread strategies on this, or credit spread strategies, because it's just going to go sideways for a while. So you can probably sell call spreads anywhere above like 115. You can sell put spreads anywhere below like 85. So it's trading in that range. So you can do that. And like for me right now, I'm kind of looking for it to come back down towards 90, so I could still sell some puts at 80 and grab some shares around between 80 and 70. That's where I really want to grab shares, is around this region down here. I have sold some puts in the last couple months or so, and I haven't got a sign yet. So I'm just been collecting the very small premiums of that, because I thought it was going to come lower, but it seems to be holding here pretty well. So I'll continue to sell puts and just collect some premium, and then maybe finally when the consolidation tightens up, that's when I'm going to start taking some shares and buying some leap options for longer swing trade. Meta got extended when parabolic, so it got really extended. It needs to pull back, so I'm looking forward to gap fill, come back, test this 200 period moving average. Also, this is the area that it broke out of. I also want to need to close the gap, retest this edge to see if it holds. If it holds, then that's a really good buy zone right here if it actually holds. If it doesn't hold and actually breaks back below this, be very careful. We can come all the way back down. But other than that, what I'm looking for right now is just this gap fill. Once the gap fills, then maybe if it holds right here and it bounces, then I'll go back into the stock. Google's been pretty weak because they did that AI chatbot that they have, that bird or whatever that they have. It's a similar version of Chat GPT. So it had a really sharp sell off when their chat answer the question wrong. So it had these two really strong sell offs. You can see the volume on that sell off. It's huge, right? Huge selling volume right here. So right now I'm just watching this. I kind of hoping for it to come down lower. I'm looking to get it around that $80, $85 region. So I did I did the same thing on Amazon with Google. I sold puts, went and grab some shares. Try to grab some shares lower. And right now, it's still in a very defined downtrend, lower lows, lower highs. I need to see this thing chop around. It's probably going to base around here for a while, right? Between these two ranges right here, these two range. So it's going to chop around right here. So it's good for selling credit spreads if you want to make some income on this stock while wait to get some shares. Just sell your spreads at the lower end, sell your call spreads on the higher end. Microsoft. So Microsoft's been pretty strong compared to other names. So Microsoft owns 49% of ChatGPT. So I think that's going to do them pretty good in the longer term. Um, so right now I am looking for Microsoft to hold somewhere along this area right here between like 240 and 260. So if you actually holds around here, you can create this scenario and create like a big cup and handle. So we can come all the way back up to around that. 290, 295 area, and then maybe a little pull back, a little base right here before going higher. So that's the scenario I'm looking at for Microsoft. And this is a very well-defined double bottom bounce right here, and it created a higher high off from the midpoint. So this looks very much like a cup and handle scenario that's being worked out. So any kind of dips is a buying opportunity. As long as he holds and creates a higher low, it's a buying opportunity. And you can try to grab some shares and buy some leap options on this thing if you actually can hold around that, above that 240 area. Netflix. So Netflix is steadily climbing up ever since that they had the earnings. Last time it did well. It gap filled, and it's approaching that heavy resistance area. So you can see that right here is losing some momentum now. So it's likely it's going to come back, retest the 50, breaks the 50, then going to retest the 100, and then if it breaks below that, it's going to go much lower if it breaks. This is the area you want to see hold above, right? You want to see a hold above, likely right here, right? You want to see a hold above here to go higher, right? If it goes lower than there, your odds of it to continue higher decreases. So you want to see it hold at least 300, right? If it holds 300, then it's fine. It's a higher low. It can go higher. But if it breaks below 300, it's likely that it's going to start losing momentum and come all the way back down a little bit. All right. So AI has been very hot. Nvidia is one of the top AI stocks. So retailers love this thing. As you can see, this has been a very strong parabolic move right here on the Nvidia. So I am looking for this to pull back. I'm looking for it to pull back to around that 190 area, possibly 180. Let's measure the move. Yeah, so around that 195, between 175 and 195. That's the area you want to look at for it to pull back to. If it pulls back to that level, it's a good area to start buying um, for a higher low. They do have earnings coming up. It really depends how the earnings gonna go. If the earnings are going well, it's likely they can like pop this thing and go for this right away, which is a big move, and big strong move, right? If earnings are bad, you're likely to see 180 if that happens, right? And if it comes back at 180, you want to let it console for a few days and then see if it holds and then fill that gap after. Tesla, another strong retail name. So look at this volume on Tesla, right? When it hit that 100 area, see this increase in volume, huge volume coming through. That is a lot of buying. This is capitulation buying, right? So if you look over here, the last time it did that was right around right here before the big huge run, right? See that volume increase? See how small the volume was in between, and all of a sudden you get twice as much volume every single day. That is the bottom. That's how bottoms are formed, right? So there's a lot of buying. It is extended. You want to see it come back um above 160, right? So if you can hold above 160, above 170 is better. So you want to see it like hold above here, right? Above that low right there. If you can hold above that low, you can continue higher. It is at the 200-day moving average right now, so it's a very heavy resistance area. If you look over here, you see that this region right here is a big supply and demand area, and then if you zoom out, you'll see that this is where a bulk of the supply is right up here, right? So we're just heading into this big bulk of supply range right here, right? So that's likely the area is going to get rejected, and it'll take time to break through this. It will need to consolidate a little bit and then go higher, right? You want to see volume to continue to increase, and that's how you get the stock to move, increase in volume. So right now we're seeing huge volume coming through, and you want to see it pullback on light volume and then explosion volume going back up, right? So Tesla is one of those big, huge retail names that everybody loves to trade. In the smart money lets you short this stock, but that's how you get those giant short squeezes too, because there's a lot of buyers coming through. A lot of retailers love this stock. So if that's the same scenario, you know, once it breaks above this 200 period moving average and then consolidate a bit, then you can look for it to come back up to around that $300 region. But as of now, it's overextended. It needs to consolidate or pull back. You need to cool down a bit before going any higher. That will make the move a lot more sustainable when it happens that way. So before you want to take a look, this is scenario was before, right? It got a sharp rally, it dropped huge, and then it created a higher low, and then finally breakout. See, it went a sharp reversal and then create like this cup and handle type of pattern, and then it breaks. It needs to once it makes that parabolic move, you see how it consolidates. Once it consolidates, and then it makes another big, huge move, right? So you're looking for the same thing right here. It made a really nice bounce right here. You want to see it to consolidate and then let things cool down and then the big explosion move up. Anyway, that's pretty much it for this week. We are starting to look at swing trading, and I've been posting a lot of swing trading ideas. So if you guys are interested in getting some good setups for the next big move, join our Discord. We'll be posting ideas and trade alerts in there. That's the only trade alerts I do, swing trading trade alerts. I don't do day trading alerts. For day trading, I only teach how to trade day trading. But for swing trading, I do have alerts, and then whenever I go into a swing trade position, I will post it. Let's take a look at the aggro. So lately we've been pretty choppy on the days, but the aggro is still catching these really strong trend days. So when it's making a big parabolic move, you see how it catches the entire move, right? If you could capture that move, that's your week maker right there. That's a big move down, right? And within the same day, we use the 2 minute and use some of the strategies provided. You can see how it buys at the bottom and then sells at resistance at the EMAs. Get rejected down, you could have bought the double bottom. You could have scalped some of these, and then on the way back up is where you catch some of the bigger trends. Right. So if you look at 5 minutes, same thing, right? You capture these mini trends with scalps, and then the big trends, you'll catch them all, right? So these big trends right here is where your money makers are. These little ones right here is where majority of people lose money if they don't know how to scalp. So you do need some learning on technical analysis to use the algorithm properly to your advantage. But if you don't know anything about technicals, on the choppy days, it's going to be hard for you to make money. But on the trend days, you still will print a lot of money. So if you understand risk management, how to trade with it, you can still make a lot of money, right? So you can see some of these, like, even though we weren't really strong trend days, there's still strong moves within the days, right? So if you just follow the algo on the strong moves, you can stay in the trade much longer, and only gives you the exits when you're supposed to exit. All right, see you guys next week. Make sure to like, subscribe, and hit that bell icon so you can get all the updates. See you guys next week.